Alrighty, good morning. I know I sound sick. I'm actually feeling a lot better than I was last week. I'm gonna have this deep, throaty, sexy voice probably for a few days, so we'll see. We'll see how it goes. Welcome. Glad you guys are here. This is our pre-market prep for November 10th, 2025. And today and tomorrow is going to be kind of the last days that I do this just open, you know, just straight on public. What's going to change is you can still get access to these. If you look in the description of the live stream, there's a link to a free community. Just join that free community and you'll continue to be able to get access to these. So I'll explain how to do that. And if you're already part of my existing Discord channel or one of my programs, just pay attention because we're doing a big migration over to another platform. That's kind of the impetus for the community setup and things of that nature. So you're going to want to pay attention to that and migrate yourself over, and I'll work with you on that too. So reach out if you have any challenges. But yeah, this is an exciting week. We're just moving to something that we like a lot better for our platform, for community features, for really helping to develop traders in a much more, I think, streamlined way. Like really getting into what does it take to be profitable, and let's focus on those things. So related to that, you guys know that I do a pre-market prep. This is part of that work, is doing that pre-market prep, showing you how I do pre-market. I use data and machine learning. So I use 17 years worth of data and machine learning algorithms that help me to reliably predict with high confidence the structure of how the RDR session, the regular trading hour session starting at 9:30 Eastern time, is going to form. And so far, I'm going to put together a spreadsheet because I think it'll be really interesting. So far, I think it's about 90% accurate, 95, maybe even 100%. I don't know. I've got to go. There's a couple days that I'm like, yeah, that was probably, I'll count that as like it wasn't quite accurate, but it was it was pretty darn close. So I'll go through all of the lives that I've done so far, and we'll just rank them and see how we did in terms of accuracy. And I think it's going to be well above the 95%. So let's talk about what I'd like to do is just go back to what did we do last week. So last week was, or last Friday, let me take some things off here and you don't really need to see everything. So if we look, just thinking about the patterns. So if we think about the patterns, if we call them models, I call them models. And last Friday, we had a model that was called a downside X plus. So it was a very strong downside expectation. And that, basically at 7:30, sometime around this period of time, I knew that we would form some sort of downside structure that would look like this. Okay. Not necessarily exactly locations, but it would just be that the IDR high and the IDR low of the regular trading hour sessions, which is formed in the first hour of the day, would be fully below the overnight IDR high and low. Okay, so this is just one of the models called a downside X plus model. And I think at the time, I think we were kind of mixed in our models. We were like maybe one or the other. Let me kind of bring up the YouTube video. So this is, oops, again. Let me bring up the YouTube video here. Okay, so this is kind of where we were. We were basically going through our data. We had a weird contraction day, and so we were kind of mixed. We were either 35% downside X plus or 35% range expansion. And then when we kind of put in the rest of our data, it looked like we were, again, exactly the same. So 44%, even when we were below. So this was really interesting. So even when we were below, we were still 44% downside X plus and 44% range expansion. Now, the tricky part about something like this is that means that when we started this opening candle, right, it could have very well just turned and gone straight up. What am I using here? Let me use this. So we could have come down here and then just come straight up like this. And that would have formed our range expansion structure. And then we would have gotten that. So this, this was really, mixed in terms of what we were expecting. But then if you paid attention to the video, at the end of the video, I went and looked at NQ. And so when we looked at NQ was way more clear in the data. When we went and looked at NQ here, we got to a very strong downside X plus. And what I said was, because there's so much correlation between NQ and ES, that I would weight ES more on the downside X plus, just because NQ was overwhelmingly downside X plus. And so, not exactly 100% relative to the data specifically around ES, but certainly using the compatibility with NQ and NQ's data to get a better, more clear read on ES. And that's what we end up getting. We also got that as well on NQ. Actually, I'm looking at NQ. I should be looking at ES here. Sorry, guys. That's ES. There we go. My bad. I should be paying attention to my charts. So it's all the same, though. This was ES. This was NQ. Sorry if I was confusing there, but yeah, we ended up getting downside X plus on both of these instruments, which was great. So it's kind of what we expected. So again, nice. Now let's talk about today, because today is, again, really super interesting. I was thinking about this. You've probably heard in the markets now of the Santa rally. So we're approaching the possibility of the beginning of a Santa rally. And this is where kind of the last quarter, last month of the year, you get a really strong up move as the big banks and hedge funds and everybody else, they want to finish the year positive. The other thing that we have that's really interesting, and I mentioned this a while ago, is our all-time high for ES and NQ was actually formed in an ADR, an Asian session. Okay, so way back here, you can see, let me just point this out. This was our prior all-time high, just formed in a US session. And then we breached that here in an Asian session. And usually the market doesn't like an all-time high being formed that isn't inside the US session. And so I was expecting in one of these days that we might pop up and actually breach this. As we drifted away from it longer, it became evident we're not going to do that. We've kind of had this big pullback down, kind of this big move down, and then we kind of looks like we're getting maybe a little bit of a V reversal. So there's a possibility that we could get a Santa rally and then kind of go back and take out that high. This particular pattern that we have right here, this is a strongly upside pattern. And the reason is because, once this period ended, we never came back and even tested this midline. And now that we have this period ended, we haven't, even in fact, other than right here, when we were just forming the structure, right? This midline wasn't even formed until this point in time. We've never even come back to test this midline. So this is what we call an unbroken upside model. And if we bring this up into our data, so just take a look and see what it says. So it's Monday, we're upside X plus, long, true, and our open location is above. We have a 55% probability that in the RDR session that we're going to form another upside X plus model. Okay, so it's going to look, the first hour is going to look something like this. Okay, it'll look something like this. So this is what we're expecting. It's pretty clear. There's not much else to talk about with this other than, yeah, this is what's likely to happen. What are the other scenarios? So the other important scenarios to watch are, do we breach this? In other words, do we close below this IDR high? And then do we close below this midline right here? Because those two events will change the data. So if we come back and look at the data, let's just see what that looks like. So we come back here. I should also add, getting down to the end of this. So if you have questions, you should get your questions in right now. All right, so if we breach the IDR, right, then we kind of have, you know, a little bit of a higher probability of range expansion. Range expansion always assumes that the midline is going to break. If the midline doesn't break, then we're going to get this upside X model. Okay, so we, you know, upside X plus for right now, right? If we breach this level here, okay, so if we breach, where's my little circle? If we breach this right here, then we're either getting this or this. It's going to look like one of these two things. So that's what we're watching between now and 9:30 is what's the reaction down here? Do the bulls stay strong and stay in here? And otherwise we're gonna get something like this. And I'm going to be looking for longs, you know, as we start to open. So that's my game plan. Awesome. All right. So upside X plus, unless we breach this, then we're looking at this. And then if we breach the midline, now we're looking at range expansion. So that's what the day is going to look like. All right, guys. That's all I have. No questions today. So y'all have an awesome, awesome trading day and make great decisions. Later.